Okay, guys, we are back at it. And in this one, we are going to be talking about the difference between long term investors, swing traders, and day traders. How to decipher between the three, how to choose which one is best for you, and how to know what stocks to go for accordingly. To first begin, what we're going to talk about is the different time frames for all of them. Different types of traders have different types, or investors have different types of time frames that you use to judge these things out on. If you are the longer term investor, you like to use your long term investment time frames, your monthly charts, your weekly charts. You want to see if they are oversold or if they are overbought, for one. If you are the longer term investor, you'll be looking more into fundamentals. I'll show you how to do more of those things here in just a bit. If you are the swing trader, you'll be looking into more swing trade time frames, day trade time frames, 4-hour chart time frames, looking to see when it becomes most oversold or overbought. And if you see my previous lessons, then you should know what those things mean by now. If you are new here, overbought is the position where you do not want to buy. That shows you on your RSI indicator. And oversold is the position that's showing you when you do want to buy on your RSI indicator. You match that up with the next round of bearish divergence if you don't want to buy, and it's going to sell off. You match that up with your next round of bullish divergence on your MACD indicator if you do want to buy. And then when it becomes overbought, you're matching that back up with the next round of bearish divergence where you don't want to buy. And then when it sells off, you're matching that back up with your next round of bullish divergence where you do want to buy. Everybody gets a turn. You see, you're just going from rounds, and I can zoom out and show you rounds of bullishness, the rounds, then a rounds of bearishness. Look for some more rounds of bullishness before it hits another round of bearishness. So if you are the trader, you are following along with the next round. If you are the swing trader, specifically, you are following along with the round, specifically on your swing trade time frames. Those are your dailies, once again, in your 4 hours. Oversold to overbought. If you are like overnight thing, you probably best honing in on your 15-minute charts. You want to see it oversold into the after hours. Let's see if we can find you a quick example here, where you can see if a stock is going oversold towards the after hours, it's getting ready to come in for the next round of bullish divergence. Again, trading time frames. We'll talk about more key statistics, and we'll talk about candlesticks and all that stuff like that here. A quick example here for those of you who are looking at this right now and wondering what's up with this chart. It has the low volume. Nobody's touching this stock 120,000 in volume. That's no volume at all. Make it look like this. And if you are the quick day trader, which I can't show you on a quick day trade on this because of low volume, I can show you over on your most actives that do have the high volume. For you quick day traders, you'll be using your quick day trade time frames, the 1 minute charts. Maybe some of you like to use the 2s and 3s and whatnot, but the 1 minute charts. And if you're looking for a day trade throughout the day, your 15-minute chart. You hone in from your 15-minute chart to your 1 minute chart. The easiest way for you quick day traders looking for your quick day trades is still to see if that thing is oversold and safe for you, making bullish divergence, or if it's overbought and dangerous for you, making bearish divergence. It will get spiky. These spikes here are at 7 a.m. I know it's say 8 a.m. down here, but like my thing is an hour faster. But these are at 7 a.m. When the other apps open, and these pre-market spikes always happen on almost every single stock at 7 a.m. Just a quick tidbit there. Now that you understand the different time frames between you long-term investors, you traders, and you swing traders, and you quick day traders. Now, how to know when to best see these things? Well, the first thing to understand now is that the long term investor does not believe in the trade. In fact, long-term investors do not like traders. They do not get along. Let me tell you why. Because if you are a long-term investor into something and you're looking for something to continue to go up non-stop continuously, as we can see here on this example, this is the TSSI with the volume of about 1 million on the last trading day, for anyone who was wondering. Long-term investors have been long-term investing into this all the way up. Long-term investors would have hated for this thing to get up to the millions and millions in volume, where, let me show you this so you understand everything I'm saying while I'm saying it. And those millions and millions of volume, for all the day traders are going to want to come in and get active with the day trades. And we have a key word here, the trade, because for traders, we are going to sell that thing back off, point blank period, because we trade. We're about to finish that trade by locking in our gains and are selling that thing back off. Everyone who is selling that thing off is a trader. And don't get me wrong, you may have some people who just been long-term investing in there forever, and then they just deciding to just sell off now. You never know, of course. And if you're on a monthly chart, you'll be able to see if all the long-term investors done sold off, because on your long-term investment time frames, it will have had sold all the way off. And in this case, the SMX that we're looking at here, I don't know exactly what this is. I think this is a Bitcoin mining thing. We'll talk more about how you find these things out here in just 1 second. In fact, it's a perfect time because for you longer term investors, it's more about the fundamentals. You see, you want to be able to understand what you're getting into, believe in that company, man. You probably want to make sure that they got that money coming in, and they better have an upcoming catalyst for you to look forward to. Because if they don't, how can they continue to grow? So you want to look into a few things. We'll talk about stats here in just a bit, and the best types for you long-term investors, traders, and all that stuff like that. But for now, for you long-term investors, you want to be checking out your briefing. We use our Webull investing platform. Check out your briefing. See what that company is. This, for example, is the SMX. They are a public limited company is a business to business and or B2B white label tech company. This company is focused on pioneering its technology and market tracking and marking tracking, measuring, and digital platform integrations, so on and so forth. You want to be diving in a bit deeper. Do they have options? If they don't have options, then it's not going to have so many bigger players in there too often. Long-term investors and bigger players love options. So if your stock has options, you'll be seeing much more volatility coming in from a side that many people don't even know exists, because many people don't understand or believe they need to know how to trade options, and you need to know how to trade and or read options, which I'll teach you more about in a later lesson, not to give you too much here. Okay, but check out your corporate actions. Keep up with your press releases. We talking about 4Ks, 10Ks, F1s. You really want to be checking out the 10Ks and their balance sheets and stuff like that. And so when you get into their balance sheets, you'll be able to see if they got total assets outdoing total liabilities. This is on a quarterly, of course, and you can see those things on the annually if you need to. And if you're a long-term investor, then you definitely need to. And here most recently, over the last few years, hey, now they doing great. Looking forward to the next upcoming annual report. It's the end of the year, so those things going to be coming in into the next year. But on a quarterly, these come out quarterly, and you'll be able to see if they keep on keeping up with their money or they coming up with more liabilities. For those of you who don't know how to read this, the blue bars are their total assets. You want them to have more money. The green bar is their liabilities. You don't want them to be having this debt. The orange bar is the debt to asset ratio. We want to watch the debt to asset ratio get down while liabilities stay low and or decrease while assets increase. And we'll talk more about that another time. Not to give you too much. Your income statements, they got that bread. Make sure you're reading up on those things. And your financial forecast, okay? All of these things will give you a better evaluation and give you a determination on if they're in good standings or not, which could make you more confident and deter you from a longer term investment, because you got to believe in them and keep up to date with their news. If they ain't coming out with that news, and thing is, so they don't gotta come out with news. If they not coming out with news, that doesn't mean that they're not a good company. You just want to be most up to date, and some of them are much better at coming out with more news because some of them are more actively completing projects and making the milestones and so on and so forth, and making plans and whatnot. Some companies lag for a while, like And you don't know what lag mean. They start to, it's like their business starts to freeze, or like especially for like therapeutics and biotechs, they really slow down because it's all about finishing that medicine and or drug that they're working on to get that FDA approval, and they might not even get that FDA approval. Some they they really don't. So when you see a lot of bio and therapeutic stocks and they done been sold all the way off and stuff like that, they probably got FDA disapprovals and whatnot. Just keep those things in mind. Just a quick tidbit there, And this is what I just showed you right now is a therapeutic or pharmaceutical and whatnot. But where we at? So yeah, long term investors. Getting back to they briefing of after you done checking out all their stuff, they news and they finances and they analyses, and if they got the big whales and a million orders coming in and all that stuff like that, then you'll be able to go ahead and check out their websites and their prospectus and all that stuff like that. And then you just want to see what they really about, what they really got going on. They got anything new in the makings, something new upcoming. The more uncertainties you can take away, the more certain you can be, and check out everything you can in the investor section. We're not going to read through all that right now. There's more to talk about. Now, down to you, swing traders. I'm a swing trader. You're not going to learn the markets if you don't start swing trading. There is no skill at all in long term investing. The true skill comes down to the trade. This swing trading is what's going to help you learn and master the markets. Why, you ask? Why the swing trading? Why so specific on just that? And why am I the swing trader? So, because if you're going for the long-term investments, you're not getting active in the markets. You mainly probably really just only watching that one stock that you into, which means you didn't study anything about anything else on the markets at all. You definitely didn't feel it because you're not active in those. You're just watching that one thing, and you're watching that one thing for a longer term investment. So, and if a newer trader probably didn't get in there off a long term investment time frame. A newer investor will get into a new long term investment off a 1 minute chart. Just seeing some bullishness coming in throughout one day. We've all been there. We've all done that. Y'all know how I go. My goal here is to make sure nobody else runs into that. So if you are the swing trader, it's gonna help you learn everything. Because if you're day trading, you don't have time to digest that information. You can feel it, and you need to, but you don't have time to digest that information. So when you get into your swing trade, you can study it slowly, day by day by day. As the swing trader, you want to get in, of course, as we said before, your 4 hour time frame, the 4 hour swing trade chart time frame. See when it's oversold, and once you get in at the bottom of oversold, now you see you have a few days to study, analyze, and watch it and digest the information until it becomes overbought, where you want to lock in gains. And then after you did that successful trade on off everything, you probably sold off early. Don't get me wrong. And welcome anyone joining in on the Banking with Billy classroom. Currently doing a live lesson on a difference between long term investing, swing trading, and day trading. How to choose what the best is for you. About halfway done with this, and if you off YouTube, TikTok, Facebook, wherever you seeing this at, get this thing a like. This is knowledge that changes lives. Again, the goal here is to my goal in life is to make sure nobody can run into those problems that I had to deal with when I first started learning the trading, and I'm making it easy. So once again, where we at? So swing trades, yeah, 4 hour chart down at the bottom when it's overbought, and it'll give you time to digest and study that information. Once again, if you are the long term investor, you want to master your skills, and you want to be able to digest everything else off the market to analyze and focus on everything else, because you only be focused on that one trade, that one long term investment. And to master markets and master yourself and how you best feel and stuff like that, you got to really be active in not the day trade, but the swing trade where you can take your time to digest off every round from oversold to overbought off every round. And I'm just showing you a random stock. Well, this is NVDA. I can show you a different stock. It does the same thing off your 4 hour chart for every round. And you can study that information and digest it. Of course, if you only the overnight swing trader, then you're doing that off of your 15-minute charts from oversold, and you locking in gains when the market's open in the morning when it gets overbought, of course. And then if you are the 1 minute, if you were the day trader, so the day traders, okay, day traders are the ones that ruin what even could be a long term investment. If it's about to be a long term investment, a good stock, solid and sound, You don't want day traders in there. Maybe swing traders might not have too much pressure with the swing traders, but because a lot of swing traders might even become and decide to turn into a long-term investor half the time. But a day trader is gonna ruin that stock every single time. They're gonna sell that thing off that same day. It doesn't matter how far up that stock goes. It doesn't matter what everybody else's plan is. It give me 1 second. Yeah. I'm Billy, by the way. I'm Brian. Nice to meet you. Yeah. Well, yeah, the furnace just stopped working just yesterday morning, I believe. Down here. I'm here. I'm making a video now, so I'm gonna finish this video up and let you do your thing. Let me know if you need anything. Yeah, where was I? So yeah, so the day traders are the ones that are going to ruin the stock. It doesn't matter if that's a solid and sound company or if they just came out with a good news or good catalyst, or even if that's a company of the future. The day traders, they already have the plan to lock in gains. And if enough day traders lock in gains off of that stock, it's gonna ruin the trajectory and the bullishness that's coming in, making that thing go down, like how you can see in the last trading day of SOUN, that already came in for multiple days of bullishness. Day traders are the ones to watch out for. Now that you understand the difference between long terms, swing trades, and day trades, it's best to understand the overall market conditions to compare those day by day within your long term investment, swing trade, or day trade. Because along with those styles of trading, you're also going to get the market conditions that will turn bullish or bearish day by day. Once this happens, if they are bullish, your stocks will continue to go up, or they may start to drop down if they get bearish. And we can see here in our last trading day, we had the market starting to turn much more bearish all throughout the day. Here towards the end, they started to get a little bit more bullish in the end of the trading day, which they usually do around the end because the swing traders, overnight swing traders, are looking to get bullish for the overnight swing trade. So here in the end of the day, you got 3,300 advancers and about 3,000 decliners. Watch this throughout the trading day while you're looking back at your stocks for your swing trade, your day trade, or your long term investment to get a better understanding of why your stocks go up or why your stocks go down, and keep up to date with the overall market news and or investor news. By keeping up to date with the overall market news and investor news, then you'll be knowing what, why, and how the markets are going into that direction that they are about to go in. Understanding options is another thing that is very important to understand what the markets are getting ready to do next. But not to overwhelm you with too much. We'll talk about that in the next lesson. Let me know what you guys need to learn next. I'll get that updated in the next video. I'll see y'all there and happy trading.